Greetings and welcome. My name is Reginald Lyerly, and I am the host of Keeping North Carolina Families Covered. Well, anyway, today is going to be a good one for you. This is a topic that is on the minds of a lot of people, and especially with their loved ones. Today, I want to talk to you about final expense life coverage. Why is this so important? If you hear the term final expense insurance or final expense coverage, and I'm going to refer to my notes here to make sure we're straight here. Or if you hear burial insurance, this is what it talks about. It's used to pay for funeral and burial expenses or anything associated with end of life coverage. This is the type of coverage that is usually easier to obtain than most other types of insurance because there's usually not a health assessment or medical exam associated with it. And for many people, and especially our seniors, some need this coverage when either an policy has lapsed or need additional coverage in addition to what they already have. But let's look at how it works, and this will give you a good idea. Listen, final expense coverages, they can often be sold as whole life policies, meaning it can be sold as permanent coverage. It also can be sold as term life insurance, which means it's only enforced for a period of time, but it won't build up cash value. If you look at the two types, whole means you can build cash value in it. Term means it's only for a time and you don't build cash value. But let's get back to the regular issue, okay? Typically, final expense life insurance usually has a set death benefit, and so a beneficiary is named, that person decedes, and the funds are transferred or goes to the beneficiary that's named. Typically, these type of policies are reserved for those in the ages of between the ages of 45 and 85. Um, in theory, anyone can get this type of policy, but those age groups are the ones who get them the most. And so it's usually meant to cover funeral costs, but it can be used to cover other things, such as like nursing home bills, hospital stays, mortgages, things that a person may have accumulated while they are alive. Like other types of insurance, they offer insurance riders, so it's like additional add-ons to the coverage. So this is not limited to these, but there's also these are three that I'm just going to talk about briefly. You can have most come with an accidental death benefit. Of course, that's going to depend on the company and the policy and the amount that person is covered for. Sometimes it'll come with an accelerated death benefit. This allows that person, depending on the company and who they get, this allows them to use a portion of the policy while that person is still alive. You also hear the term living benefits as well, but that's what that refers to. And you also have children's term insurance because you have some companies that have policies where they can allow a child rider or children's term insurance to be added to the existing policy. That usually can work pretty good for children, and you can use term until they become adults until they're able to convert that policy into their own policy. Um, and for many companies, that could be well into a child's 20s before they'd have to convert that into their own policy. That is why many people get children's riders, so it works for that benefit. Okay, look at who's eligible. We want to know who's eligible for this type of insurance. Most people over 50 will not have a problem getting this type of insurance at all. It'll be very relatively easy to do because it doesn't require a medical exam. You have a lot of times people in this age group may have one or more conditions, may or may not be on medications, and that's usually a good thing. Most times, if you have and sometimes guaranteed issue policies are generally what they are because they're not really asking any health issues, but it's just a matter of fully disclosing what's really going on. Let's look at the pros and the cons when it comes to things like final expense coverage. Okay, I got my notes here because I want to make sure this is correct for you. The pros is it covers the end of life expenses for beneficiaries. It offers fixed premiums, meaning once that premium is set at so much per month, it stays there. The only way it doesn't is that if the person chooses to lower their coverage or they choose to increase their coverage. Health exams are typically not required. So those are the advantages for these type of policies. But I also want to tell you the disadvantages of these type of policies as well. So let's be fair. There are good points and not so good points. You got to look at the pros and the cons, and ultimately, a person has to make an informed decision based on what's presented to them. But let's look at the cons. The premiums could eventually total more than the death benefit. And that is a con when it comes to these type of products. It may be more expensive than traditional life insurance obtained at an earlier age. And I'm going to tell you why that is. I oftentimes tell people when it comes to insurance, today is as cheap as it's going to be for you to get covered. Yes, the older you are, the more expensive it is to get insurance. So, yes, if a person, for instance, is 60 years old, they're not going to get coverage at the rate that someone who's 30 is going to get. Mathematically, that will not happen. And I tell people that realistically and transparently within the insurance industry. The benefit may be smaller because you have policies that may some cover 30, some cover $35,000, sometimes more, but it won't be those type of policies that cover hundreds of thousands of dollars typically. So those are the pros and the cons when it comes to that. Now, there are different companies that can offer this type of coverage to you, and many of them are very good, and many will work with you in terms of what you can afford, and depending on what's going on with your history. One good advantage when person has final expense coverage, typically if a final expense company has everything that they need once a person deceased, they're usually pretty swift about making sure the beneficiary receives the death benefit because they understand that that first 7 days of when someone deceives is very critical, and they know that there are things that have to happen within that time. Direct business with the funeral home and a whole lot of things going on, and a lot of times that death benefit is used for that purpose. And I will tell you, when you make the claim in most situations, the first step you're going to do is that beneficiary or the family, they're going to contact either the agent that helped them sell the policy or the company who got them started. The next thing they're going to do is, if there are any claims forms to fill out, make sure that that happens and submit any required documentation. Usually, is like everything associated with that policy and any personally identifying information with the deceased. The most important one is going to be the death certificate because you got to have evidence that person deceded for final expense because that's the premise, because that's exactly what you're using it for. Now, the next thing is usually awaiting the insurance company's decision. Usually, most companies, if they have everything, I know final expense companies because I have worked in that area before. They're usually pretty quick about paying out, and so that's usually what the thing is. And we know funerals are not cheap. We know in many states the cost of them are going up more and more and more. And a lot of people are using regular funerals. Sometimes they're using cremation, and all different things to do the loved ones. But I really want you to know the differences. Why final expense is important. The pros and cons of it. How to obtain a policy. What to do when you have a policy and to file a claim, and who can qualify for it, and what are the steps to getting that. I work in this industry. I have a pretty good idea what final expense coverages. So if you're in the North Carolina and South Carolina area, I am a licensed agent. I will be able to help you. So that is something to look at. The main thing is you don't want to leave your family with a bill and a burden. Is the loss of them is going to be tough enough already. It's going to be even tougher when now there are unexpected bills and they don't know how to cover them. If you're viewing this for the first time, I want to say welcome because you could be any other place but here. But we're glad you're here. Don't forget to like, don't forget to share, don't forget to subscribe. Let me know how I'm doing, and I'll be sure to put out more of these. Thank you and have a wonderful day.